Okay, very good morning, everyone. So we will be discussing today with regarding to a seventh question. Along with also, we will also discuss the eighth question and the ninth question of the cash flow statement. Okay. So now, look at the seventh question. So there is a following is a balance sheet of AB Company Limited as at 1st January 2015 and 31st December 2015. Within the same year, the cash flow statement is given, and you need to prepare a December 2015 cash flow statement. Okay. So cash flow statement with regarding to a 2031st December 2015 should be prepared. So you know to segregate the investing, operating as well as the financing activity. So need not be again explain the same thing. So equity share capital comes under the financing activity. Share premium, any kind of premium with relating to a share capital. So it is a financing activity only. So make sure that the share premium is increased. Obviously, the premium state that the value is increased only. So here it is nil and 30,000. So it is increased. So share premium also appears in the financing activity. Clear? So now the general reserve. So general reserve is increased and transfer to general reserve is a cash item. So which will be treated under the operating activity. Transfer to general reserve, adding back to the non-cash expenses. Then profit and loss account will be taking the difference. So 6% debentures, there is increase in the debentures value. So this debenture also appears in the financing activity. Fine. And sundry creditors. So there is a sundry creditors. So sundry creditors is increased. So increase in the current liability is the inflow of cash. So whenever there is an inflow of cash, which will be added back. Okay. So provision for be very particular with the provision for taxation and the proposed dividend. If at all the adjustment is given, you will prepare a separate account. Very important, as well as the proposed dividend is also very important. Whenever the adjustment is given, you will prepare a separate account. When there is no adjustment, nothing stated, just it is given as provision for taxation and the proposed dividend, how the treatment should be done. So provision for taxation, the last year value, clear? The last year should be taken in the operating activity. Fine. And the beginning year, whichever the beginning year which is given, the provision for taxation is treated as an tax paid. So where do you take the tax paid? Which will be deducted after showing the increase of current assets or decrease of current assets or increase of current liability and decrease of current liability. Clear? So which is nothing but the beginning year, which is treated as an income tax paid, and the end of the year is treated as a provision created. Fine. So which will be occurred as income tax paid in the next year, not this year. So this year it is just a provision which is created. Okay. And there is also proposed dividend. So proposed dividend is 30,000 and 35,000. I told you this will appear in the operating, and this 30,000 will appear in the financing activity. Clear? So now the land and building, plant and machinery, any type of fixed asset, you need to prepare a separate account. So the reason why you prepare a separate account, even though respective of the adjustment is not given, you have to find out whenever there is an increase or reduction in the land and building or any kind of fixed assets, it is indicating that the fixed assets is been purchased or the fixed assets is sold. Right? Furniture is also fixed assets. We will prepare a separate account. Stock. So reduction of stock or increase of stock will be treating under adjustment relating to working capital changes. Okay. Sundry debtors and the bank balance should be reflected at the end of the cash flow statement. Clear? So additional information. So there is a depreciation written off during the year. So only the depreciation information is given, no more adjustment pertaining to our taxation or pertaining to a proposed dividend. Land and building, plant and machinery and furniture is given. Okay. So now go ahead with, I hope you have understood with the question. So now we'll proceed with preparation of land and buildings account first. Okay. So prepare a ledger account in order to know whether it is the purchase or sales as the depreciation is given. Okay. So make it as to balance brought down. So what is the balance brought down? It is 2,30,000. So take that into consideration. 2,30,000. Okay. And there is depreciation. So by adjusted P&L account. Okay. So adjusted P&L account. So which is nothing but a depreciation. You can also state it as depreciation, or you can also write it as adjusted P&L account. No issues in that. So make it as 60,000 as the value. Clear? So now take the closing value by balance brought down. What is the value of brought down? Land and building is 3,90,000. Here, now calculate the information given. So 60,000 plus 3,90,000 is 4,50,000. 4,50,000. So 4,50,000. So whatever the remaining balance will be, as you got the difference in the debit, so it is a purchases. So make it as to bank or cash account. So which is indicating what? Which is indicating purchases balancing figure. Okay. So it will be the value, it is 2,20,000. Okay. 2,20,000 is the purchases value. Clear? So now go ahead with the plant and machinery account in the same way. So here the plant and machinery. So take the balance brought down. So what is the plant and machinery brought down? It is 85,400. It is 85,400. Okay. Also take the depreciation as given. So by adjusted P and L account. So it is the value of depreciation which is given in the question. It is 50,000 to be taken into consideration. Now take by balance brought down. It is the value of brought down. So in the question it is 1,40,000. Here, so you can see here plant and machinery 1,40,000. Take that into consideration. So now it is 1,90,000. 1,90,000. As you got the difference in the debit side, it is a outflow of cash, which is indicating the purchases bank or cash account. So which is indicating purchases. Make it as purchases balancing. Good. So what is the value of purchases? It is 1,04,600. Good. Now go ahead with the furniture account. To balance brought down. So brought down is 5,500. So now see the furniture. Furniture is 5,500. Closing value is 6,500. So take that into consideration by adjusted P&L account. So what is the value of depreciation which is given? 1,200. So take the value. So by balance brought down. So what is the value of drawdown? It is 6,500. Total it is 7,700. 7,700. So here also you got the difference in the debit side. So which is indicating purchases, bank or cash account. So what is the value of purchases? 2,200. Okay. Now go ahead with the cash flow statement. So take the net profit, then take all the operating, then also take the investing activity along with the financing activities. Okay. So be very careful while calculating the operating activity. I'm repeatedly telling you, because the more item is added in the net profit during the year. So what is the value of net profit you got? Profit and loss account is 30,000 and 80,800. So minus it. So which is 80,800 minus 30,000. So what will be the value? You will get 50,800. So now take the letters cash flow from operating activities. So what is the cash flow from operating activities? Here you will take all the add back all the non-cash expenses. So here which are the non-cash expenses? First record the depreciation. Depreciation on land and building. So which is given in the adjustment. What is the value of depreciation? It is 60,000. And there is also on plant and machinery. So what is the value of plant and machinery depreciation which is given? It is 50,000. So that will be taken into consideration. There is also depreciation on furniture, so which is 1,200. Okay. So now look at the balance sheet. If at all you have any non-cash expenses, so take that into consideration. There is a transfer to general reserve. So what is the value? Take the difference. It is 20,000. So now I told you there is a provision for taxation. There is no adjustment pertaining to provision created. So provision on taxation. So what is the value? The last year, and which means the end of the year will be reflecting as a provision created. So which is going to be understood that this year it is just a provision created, and in the next year, in the future year, that becomes the income tax paid, which means the tax will be paid in the future year. So now at the present year, it becomes just a provision which is going to be created here. So 40,500. Also take the proposed dividend. Proposed dividend. So what is the value of proposed dividend? It is 35,000. Together it is 2,06,700. Okay. So take the total of this becomes 2,57,500. Now take non-cash incomes. Do you have any non-cash income? So which are the non-cash incomes now? All the profits, whenever there is a profit or whenever there is any interest received or whenever there is any dividend received, so which becomes a non-cash income as there is no value. So this becomes just 2,57,500. So what is this called as? This is the net profit before changes in working capital. So we have not adjusted still the working capital changes. So now add decrease in current assets and increase in current liability. So now see the balance sheet. So whichever the current assets is decreased, stock is increased, sundry debtors is also increased. So now see the creditors. So sundry creditor is increased. Only one. So take the increase of, there is no decrease here. So take only increase in sundry creditors. So what is the value of increase in sundry creditors? It is 5,700. So you can just write it in the outer column as there is no further figure which is given. Okay. So now add these two. You will get in 2,63,200. So now reduce the increase in current assets and decrease in current liability. So what is the increase? So we have already discussed, stock is increased. So make it as increase in stock. So what is the value of increase in stock? It should be shown as the negative value, 13,300. There is also increase in data. So what is the value of increase in data? It is 10,500. Okay. So altogether gives you 23,800. So it is also indicating in the negative value. So reduce it from the value which you have already got. It is 2,39,400. So what is this? It is the cash flow from operating activities or activity. Okay. So this is major important. Now go ahead with cash flow from investing activity. So which are the investing activity? All the purchases and all the sales. In the question, you got only the purchases. So land and building is also purchased. Plant and machinery is also purchased. Furniture is also purchased. So take that information here. So make it as, so as it is a purchases, so it is a outflow of cash. So purchase of land and building. So what is the value of purchase? So it is 2,20,000. Okay. So also take the, there is another two purchases. So make it as purchase of plant and machinery. So what is the value of plant and machinery? It is 1,04,600. Okay. So now also take the purchase of furniture. Okay, so purchase of furniture is just 2,200. So as there is only a purchases which is indicating outflow of cash, so make it in a bracket itself. So what is the value? It is 2,20,000 plus 1,04,600 plus 2,200 gives you 3,26,800. Okay, so this is called as cash flow from investing activity. Okay, so this is very important. So this is the cash flow from investing activity. This is cash flow from operating activity. Okay, so out of that, reduce it. So 2,39,400 minus 3 lakh 2,39,400 minus 3,26,800 is the negative value which you got. So which is 87,400. So which you got the negative value. Now record the third information, that is cash flow from financing activities. Okay, so which are the financing activity? All the information pertaining to that. And one more thing, see here, look at this very carefully. Cash flow from operating activity we have calculated, but we have not taken still the income tax paid. Okay, so that should be taken here. So take as 2,39,400 activities before income tax paid. So now reduce the income tax paid. So where does this appears? Income tax paid. So there is a provision for taxation which is given. So the beginning of the year, that is 22,500, will be the income tax which is paid. Income tax paid. Okay. So which is below that, take it as 22,500. So after reduce this value. So whatever the value that is remaining will be 2,16,900 is cash flow from operating activities. So out of 2,16,900, reduce the value now. Okay. So it is 2,16,900 minus 3,26,800. So it is 1,09,900. So take is 1,09,900. Okay. So now take all the financing activities information into consideration. That is issue of equity shares. So what is the value of equity shares issued? 50,000. That will be added back. There is also one more value. Which is given. So take the equity share, and there is also share premium, which is a raised. So what is the value of share premium? It is 30,000, so which is increased. Okay, share premium, and there is also issue of debentures. So debenture is increased. So what is the value of debentures? It is 70,000. Now take all the reduction value into consideration. There is a payment of dividend which is made. So what is the payment of dividend? So where do you get this payment of dividend? In the question, there is a proposed dividend. So beginning of the year is the payment of dividend which is paid. So which is already been paid. So make it as in a bracket because it is indicating outflow of cash. Okay. So this is all about the financing activity. Now take all the information into consideration. So 50,000 plus 30,000 plus 70,000 minus 30,000. So this 1,20,000 is the cash flow from financing activity. Okay, so this 1,20,000 is the cash flow from investing activity. So now you have already got the negative value, that is 1,09,900 minus 1,09,900 minus 1,09,900 plus you got the value as plus in the case of financing activity. So plus 1,20,000. So what is that? That is a 10,100. So which is net increase in cash. To this net increase in cash, add the opening balance of cash or bank. So what is the opening value which is given in the question? It is 34,200. Add back to this plus 34,200. 34,200 is 54,400 will be the sorry. So it is 44,300 will be the closing balance of bank. So now see this 44,000 you got in the question also. There is 44,300 and 34,200. So we need to compulsory get this closing value. Okay. This is about your 7.